It's been another busy week this week with plenty of data and events to shake things up, but how have markets reacted? Wrapping up events with me is Peter Dixon, global equities economist from Commerzbank. So Peter, the Bank of England kept interest rates on hold earlier this week, highlighting subdued inflation in the UK due to the recent fall in oil prices and with nominal pay growth appearing to have flattened off. Mark Carney doesn't seem to be in too much of a rush, saying that the bank will move when the time is right. But what does the right time look like?
That's an interesting question because, arguably the right time to raise rates might have been last year when the economy was strong, inflation was a bit higher, and the housing market was relatively buoyant. The longer we leave interest rates on hold, the more difficult it becomes to see exactly what kind of triggers the bank will be looking for when it comes to raising rates, because inflation isn't going to go very far in the course of 2016, at least certainly not over the first half. The economy will probably slow down a little bit given the headwinds coming from abroad. And this puts the bank in a bit of a bind. I mean, arguably, rates are simply too low given the strength of the recovery that we've had over the course of the past couple of years. So it may well be that the Bank of England can simply use the shadow of the Fed and its tightening cycle to implement at least a couple of rate hikes in the course of 2016, although I rather suspect that the earliest possible date for any such action on the part of the Bank of England will be May, and it's possible that the window might not even open until August.
Commodity prices were hitting headlines this week as iron ore and oil prices continued to slump. This is amid expectations declining steel appetite in the world's biggest consumer, China, could shut down more producers, cutting demand for the raw material. So, can it get much worse?
I rather think it can. I mean, basically, if you look across the whole of the commodity space, we have seen a number of the key industrial commodities taking a big hit. In the oil market, of course, we have oversupply. That's led to a significant collapse in the price there. But I think the same is increasingly true in the base metal markets too. I saw one quote recently which suggested that China is seeing its first decline in steel production in a generation. And I think that's an interesting way of highlighting the extent to which the economy has cooled, the extent to which there's such a huge amount of overcapacity in the steel market, particularly in China. And I think we're going to find that input costs, in other words, raw material prices, iron ore, goes down further. That's going to make life even more difficult for the miners. And of course, it also means that the world is likely to be flooded with a wave of relatively cheap steel.
The Russian central bank has left rates unchanged at 11% today, in a statement saying it recognized growing inflation risks and that risks of economic cooling remain. Can you expand on these risks and their longer-term implications for Russia?
Well, I mean, it's interesting because, of course, Russia is one of the few economies in the world which still has a very high and rising inflation rate, and that, of course, is down to the collapse in the currency that we saw particularly towards the end of last year. So inflation is high. It's going to remain perhaps not quite as high as it is today, but over the course of 2016, we think the inflation rate is going to hover around 10%, which is probably a lot higher than the central bank would like. And at the same time, with the economy, if not contracting any further, not going very far either, it means that consumer incomes remain under pressure, and at a time when you've got high inflation, it means significant pressure on real incomes. And I think that's one of the reasons why the central bank probably doesn't want to cut interest rates any further, because it fears that it will exacerbate inflationary pressures and put further downward pressure on real incomes at home. So Russia's basically in a bit of a bind. 2015 was an awful year, the first half in particular. There are some signs of improvement as we head towards the end of this year and into early 2016, but it's still a very difficult road ahead.
Well, that was Peter Dixon wrapping up the week with me there. Now enjoy your weekend and make sure you tune back in on Monday when Jessica Walker will be looking at what's to come next week. For now, it's goodbye.